April 2018 as a non-deposit taking financial institution under the Companies Act of Kenya and regulated by the Central Bank of Kenya. The institution was formed as a partnership between the public sector and the private sector. And the reason was to crowd in private sector financing to support affordable housing in Kenya. Of course, there is a lot of challenges that the market in Kenya faces, not least the deficit in the number of housing available in the country, which is about 2 million at the moment, and the deficit increases by about 150,000 houses per year, and a number of other rigidities in the financial sector. Following incorporation of the company, the establishment and operationalization started, and a number of initiatives were put in place, and following which the company was launched in May 2019, and that was launched by the government of Kenya.
KMRC is a non-deposit taking financial institution. We are regulated by the Central Bank of Kenya, and a portion of our activities under the capital markets, of course, is also regulated by the Capital Markets Authority. KMRC was incorporated in 2018 under the Companies Act of 2015 and takes on a public-private partnership model. Government of Kenya holds a 25% shareholding in KMRC. The remaining 75% is spread out between a number of banks, participating banks and SACCOs. We call them PMLs, and also significant development finance institutions such as the IFC and Shelter Afrique. KMRC's operations are also well supported by significant stakeholders like the World Bank and the Africa Development Bank. We have a number of objectives. We exist as KMRC to cure the liquidity mismatch. For the longest time, of course, our primary mortgage lenders have been using their short-term deposits to lend long-term to their customers and borrowers. And KMRC has come into the picture now to cure that by offering long-term, fixed, and very cheap funding to our primary mortgage lenders so that they can in turn pass on that benefit. So that really is our main objective, to see more customers of our participating institutions take up long-term loans, and rest assured that over the period of that long-term loan, they do not have any fluctuating interest rates. KMRC also exists to increase participation in the capital markets. Part of our activities, like I mentioned earlier, we are regulated by the CMA, the Capital Markets Authority, because we participate in actively raising funds through issuing of bonds. So we are also deepening the financial markets in Kenya, and we see that as a very significant part of our existence. We also exist as KMRC to improve the mortgage lending practices in the country. We offer consultancies and we give capacity building on mortgage lending practices, standardizing that across our participating primary mortgage lenders, so that we have a uniformity of how this mortgage lending business goes.
KMRC got its license from the Central Bank of Kenya in September 2020, and within 24 months we have been able to lend 6.9 billion to 9 PMLs, which includes 5 banks and 4 SACCOs. Now that is a milestone. Within 24 months, we've actually been able to access our market, and our PMLs have been able to embrace the role that we play in terms of unlocking liquidity in the market, and also providing them affordable funding, which is not only fixed rates, but it is long-term and affordable. Our main primary mortgage lenders that we work with, we've partnered with, are banks and SACCOs. Now, being very deliberate to bring into the fold SACCOs also meant that we needed to upskill them and build capacity in terms of their resourcing and in terms of their lending products, long-term lending products to be specific. SACCOs have been there for years, but their speciality was mainly on short-term products of up to 6-7 years. But now in terms of home loans, you'll find that home loans are longer tenure products, all the way to 25 years. So what KMRC has been deliberate and intentional about is capacity building the SACCOs to make sure that they are adequately resourced and they have the know-how of how to lend long-term products. We've also made sure that we partner with the wider players. In this case, we are looking at players in the supply side, those who are developing the homes, and the players in the demand side, ourselves included, and the PMLs, and other value chain actors who include policymakers, the government, other private institutions that are there to help us in the housing, affordable housing space. And specifically, we look at partnering with professionals such as Architectural Association of Kenya, the quantity surveyors, all those. So what we have, as KMRC have done is provide an avenue for all these players to come together, have a discussion, and identify opportunities that are there in the affordable housing space, and challenges, address any challenges that are there, and possibly identify solutions that would actually work for all value chain actors.
KMRC is an equal opportunity employer. It has given me an opportunity to, to expand on my career. I've been able to interact differently with, with the customers. And not only do I see growth in terms of my career, I've also interacted a lot with the team because there's enough diversity in a lot of diversity in the institution. This has helped me also to grow my skill set in, trying to gain from different departments. KMRC has also given the team a great opportunity to celebrate different milestones, where we come together and we celebrate each other, in different achievements. So we have birthdays, we have we have graduations. These are different occasions that bring the team together, not just on work basis, but also just to interact and know each other. What is it that you do, and just to come together and celebrate. In line with the KMRC core values, collaboration has been very key because interaction with our strategic partners. We have the primary mortgage lenders, and we also have the DFIs, and also besides that we also have the different people we're trying to reach out to and drive the affordable housing agenda to. KMRC has given an opportunity to each and every staff member to just be able to take some time off to just have a social life, and also be a wholesome person. And whenever you're interacting with the team, we have a whole version of yourself in the organization.
As a National Housing Corporation, we are proud of this project. This has been a project that has been achieved through work by a lot of players, and I'm here to recognize their effort, more so the public who showed a lot of trust, particularly in a government entity. At the end of the day, we have been able to achieve these houses, but most importantly for us as National Housing Corporation is how the houses will be shared to the public. And we'd wish to reassure you that as a NHC, we have always had an open and transparent policy of allocating houses. We've been in business since 1953. And you know we have a lot of projects within Nairobi itself and across the country. We will ensure that those who did put in the applications and are eligible for houses will be considered in a fair way. And I know there are more people who applied for the houses than we have here. But at the end of the day, this is not the only project. We have a multitude of other projects coming up. And as we always say it, this is more of a proof of concept for the houses that we will do.
Today marks a critical milestone in the affordable housing agenda with the launch of the allocation of the Park Road Housing Project. This launch today literally provides an important convergence between supply and demand. As we are all aware, the critical demand for housing has not been adequately met by the supply side of the market. In fact, the demand-supply gap is mostly noticeable at the lower end of the housing market, as the lower income households have limited access to decent housing. Over the last few years, however, the country has been able to provide an average of 50,000 housing units per year, but mostly for the high-income families. In this regard, the entry of KMRC in the market is expected to improve mortgage affordability, increase the number of qualifying borrowers, and result in the expansion of the primary mortgage market and home ownership in Kenya. As a wholesale lender, KMRC provides bulk long-term housing loans to participating primary mortgage lenders at concessional rates of about 5% per year at the start. The primary mortgage lenders are expected to pass the benefit of fixed long-term funds, potentially at lower than market rates, to wananchi. We have already approved a refinanceable portfolio, that's KMRC, of about 4.5 billion, which we are working to release in due course. The institutions are now at an advanced stage of finalizing the required documentation to access the funding. We have nonetheless already received the funding for purposes of refinancing that portfolio. We have also approved credit limits of about 50.7 billion Kenya shillings on aggregate for all the 20 participating institutions, giving them greater clarity on the amounts they are eligible to draw down up to 30th of June 2021, after which new credit limits will be set. KMRC therefore stands ready to refinance mortgages originated out of this Park Road project and indeed in any other project currently under consideration. KMRC will seek to leverage its broad shareholder mix that includes the Government of Kenya, commercial banks, savings and credit cooperatives, and development finance institutions to support development in the housing market. We will also support housing developers by linking them up with the participating mortgage lenders. You know, we have about 20 institutions that participate with us, so that we effectively create a link between supply and demand. We are convinced that when the developers have a clear view of demand, they will be motivated to invest more in affordable housing developments. Accelerating mortgage registration and the title transfer processes will also have significant impact on the ability of developers to reach scale in affordable housing developments and to better manage their capital and liquidity constraints. We encourage banks, because they play in both the demand and the supply side, now that they have good clarity and visibility on both sides, to support, especially on the supply side in terms of development, because with clear visibility on the demand on this side, they will be able to potentially better manage the risk, which is a lot higher in the supply side. Although small at present, Kenya has a dynamic mortgage industry which is growing rapidly and becoming increasingly competitive. Several institutions are now in this sector. Apart from the banks which are considered traditional mortgage lenders, we now have microfinance banks, savings and credit cooperatives, who ordinarily offer loans, a majority of which go into housing, but they don't develop or they don't produce mortgages or they don't do mortgages. But KMRC has partnered with SACCOs, who we believe have a lot more greater need for liquidity for purposes of enhancing the scope of affordable housing, as they will be able to diversify their product offering. This diversity favors home loan borrowers and it creates the much needed competition in the market. We encourage Kenyans to visit our partner institutions and get information on how they can apply for a mortgage funded through KMRC, which will enable them to own an affordable home. On behalf of Kenya Mortgage Refinance Company, I wish to congratulate the State Department for Housing and Urban Development for completion of this project and the launch of the first affordable homes in Kenya.
This program started last year, April. I don't think there is any government project that has actually been undertaken with this kind of speed. And so I think we are also sending out a message that you can do good quality work, but at the same time you are able to meet the deadlines. So we are very, very excited about that. But more importantly is that these houses are going to be habited by the face of Kenya. And I think if all else fails, I think that is the most important thing, is that you don't need to know the PS, you don't need to know the housing secretary or anybody else. This process of allocation of these houses is the most transparent process, and anybody from Mama Mboga to a shoe cobbler to a Juakali artisan can today own a home. I want to clarify how the process works. Number one, you need to be registered on Boma Yangu. You need to be registered on Boma Yangu, and there are many ways in which you can register yourself. You can use USSD *688#. You can go to the portal, and there is a bomayangu.go.ke. You can go to Huduma Center, and you can just walk in, and we have got a help desk that is going to help you register. So that's a first and very important step. Number two, you need to upload certain documentation, because there is a KYC process, or know your client process, that we need. We also need to get your income details, because the houses are allocated based on your household income. So that's very, very, very important. Number three, you need to start saving towards your home. It's important to note that you need to have raised at least 12.5% of the cost of the unit typology that you have elected that you want. Number four, you need to choose Park Road, because there are other settlements, there are other schemes that are coming up. So you need to actually go and choose and say, I want Park Road, because if you don't choose, then you will just appear as a general, you're just interested. This affordable housing agenda has been misunderstood, perhaps to say that it's government that is going to be building houses. No, this agenda is about government facilitating the private sector. This housing scheme has been undertaken by an investor. They put in their money, they built it, government provided the land, and once the housing scheme was completed, we had mobilized the money from civil servants from all over the country to pay them. So I think it's important to understand how this model works. And you cannot do that without the financial institutions, because we know that our housing sector, the market is broken, and it is a systemic problem that has taken many years to be. For a country of 47 million and above to have about 25,000 mortgages, I think you can all attest that we have a problem. But we have started the journey to right those wrongs, and we cannot do it without getting the private sector involved. Any Kenyan born can aspire to have their own house. This is very, very, very important. So laying the right foundation is important, but making sure that we do it with the right partners is critical. And I can also attest that we have over 20,000 acres of land that we have set aside. So really, this journey of affordable housing, it may have taken a little bit of time to take off, but the dream is still alive. And we still believe that it's better late than never. And we will be able to deliver on this great aspiration for majority of our people. Housing is a great multiplier. It is a huge multiplier in terms of the economy. And Daktari, this scheme here, we have a Juakali association, 3 of them, from Ngong Road, Kamukunji, and Kariobangi, that came together. They collapsed their business to form a corporate. And I dare say that they are probably one of the largest companies in Kenya today because they employ over 10,000 Kenyans. And this association is the one that made all the doors that you find here in Park Road. And that is to a value of 150 million. That is 150 million shillings that went to Juakali directly without brokers in between. And I think those are some of the things that we need to also realize, that when we talk about dignifying our people, we are also creating a lot of jobs. The number of jobs that have been created here, there's a time we came here with His Excellency the President, and you'll have thought that this was a campaign trail. Then just from the staff and the employees that were working here, we were running 3 shifts. And so this is such a massive undertaking. As we speak right now, we have a pipeline of 551,000 houses that are up in the pipeline in different stages coming up. Of the 551, 23,000 are already under construction. And soon we are going to be launching about another 10,000, which is Starehe, Shaurimoyo A and B, in the coming months. We also have a big scheme that will be coming up, Portland, where we have got about 16,000 acres, but of which 4,200 has already been set aside for a new city, and where we want to put up 240,000. The master planning is done, and we already have 4 investors that are we are already negotiating with them. So it is a slow grind, but it is a grind nevertheless. The demand is real. And so I like to urge our developers, because this is now where we need the developers to come to the table. The financing for end user is in place. The banks have told you how much they are providing, and KMRC has given them the assurance that they will refinance them. So it means that as they do the mortgages, they can recycle their money and do more mortgages over time. What we now need are developers and investors to come to the table and to start building. You don't need a big scheme like this one. You can even start with 100 units. You can start with 40 units. For as long as those houses meet the definition of affordable housing, any Kenyan can go to any of these participating banks and they will be able to get a unit of their choice. We have also put in a lot of governance structure. And one of the most important things that we wanted to demonstrate with this scheme is trust, that you can actually trust government. Because I think in the past, there is an element of trust deficit. Because sometimes we say something and we do something different. We say these houses are supposed to be for a certain class of people, and then you find that those who have money come and buy 10 and 15 of them, and then they end up benefiting from them. So we have actually put together a very good governance. We have got Zamara. They are the administrators, independent administrators of the housing fund. We have Britam, the fund managers. And then we also have the main custodial bank, which is KCB.
In the history of our country, when housing development is written many years from now, you remember this event. Because largely amidst a global pandemic, we have PS and all of us have built together a program or a project in very difficult times. And when they say that there's always a silver lining in a cloud, nothing demonstrates that than this program. A lot of people are nervous in the environment we live today, and especially for the financial sector, who has stood strongly behind individuals, clients, businesses. If you look at the statistics of the banking sector, and many times it's never told. I've been chairman for long enough to know that banks are always seen as profitable and non-supportive. But if you look at the global pandemic today for COVID-19, banks have...
Once again, good morning, and thank you so much for bearing with us as we waited for our chief guest to arrive. I can confirm that all of them are in the house, just from giving them a brief. I'd like to invite all of us who are outside to come into the room so we get our program started. If you're still in the registration section, please just make your way in. We'd like to start our program. As we await their arrival, let me say that we're delighted to have you here. Thank you so much for creating time this morning to join us for the second Affordable Housing Conference. The first one took place last year, and we'll be doing a bit of recap as part of this conference. We have a very tight program over the next 3 days. Our chief guest is the Cabinet Secretary in charge of lands and housing. That is CS Njeru, and he's here with us. He'll be joining us. I'd like to walk us through some basic housekeeping. So we shall have an app, which I'm sure we all received notification for, raising questions. That is the Woover app. Please just be sure to log in. There's a section for Q&A as per every segment we shall be having here. Feel free to type your questions. At the end of every panel, I shall be aggregating them and fielding them to our panelists. Also, in case you want to use the rooms of convenience, just exit via that door, turn to your left, take the staircase. You will see the indication as marked appropriately. We are kindly requesting that we all have our phones on silent mode so we don't disrupt the flow of the program. And we shall be quite alive on the social media platforms via Twitter and Facebook. The hashtag is AffordableHousingKE. You can tweet at KMRC_CO, at KMRC_CO. Also another hashtag you can use is KAHC2022. So our morning program shall have welcoming remarks from that is Mr. Oltetia. Then we shall have a speech from the Principal Secretary in charge of the State Department for Housing. And thereafter, we shall have a speech from the PS, from the National Treasury and Planning, who will then welcome the Cabinet Secretary for Lands, Housing and Urban Development, who will give us our keynote address. That is the flow of the program this morning. And then we shall take a break where we have refreshments, networking, and then we shall be back here now for a panel conversation. I'd like to mention as well that we will be having a photo shoot right after the first session, the opening session, right outside here. So as we finalize our program, I'd request all of us to remain seated, and we have the VIPs walk out. We have our photo shoot there. My colleagues from the Fourth Estate, we shall be able to have our quick Q&A in case there'll be anything emerging after that. Also still on the Q&A, right after the CS has given his keynote remarks, we shall have a very quick session of Q&A. So in case you have any burning question, we shall agree on how to go about it. You simply flag your hand, and I will walk to you with a microphone. You introduce yourself, and you raise your question to whichever panelist we shall be having here. We shall be having two PSs, the Cabinet Secretary, and of course the CEO of KMRC. So that's how our morning agenda looks like. We have audience joining us virtually. Also, let me take this opportunity to welcome you to be part of this conversation. In case you have the Woover app, please utilize it for any questions, any issues emerging, just flag them there, and we shall be able to get visibility of it so that we incorporate it in our agenda here. Let me also mention that we are on Facebook Live and YouTube Live, so you can follow through there and capture all the developments as far as the conference is concerned. We also have a pre-event survey. If you go to your Woover app, your bottom left on the home page, if you click on it, you will see a tab for surveys. We have a pre-event survey where a series of questions have been asked. We would Ladies and gentlemen, let's welcome our chief guests. We have the CS from the Ministry of Lands and Housing, Urban Development, Karibu Sana CS. We also have the PS, State Department for Housing, Mr. Charles Hinga, Karibu Sana. We have the PS from the National Treasury, Dr. Julius Muya, glad to have you on set. And we have the CEO of KMRC, Mr. Joe Oltetia. Welcome, gentlemen. We're delighted to have you here. Thank you for creating time to be with us. Thank you. In the interest of time, I've already gone through the housekeeping rules. Ladies and gentlemen, please let's remember all that so that we have a very fruitful and engaging conference. Without much ado, let me take this opportunity to welcome Mr. Oltetia for the welcoming remarks and also hand over the program for this section to him. Karibu.
Thank you, Julian. The CS, Lands, Public Works, Housing, and Urban Development, Mr. Zach Njeru. The PS, National Treasury, Dr. Julius Muya. The PS, Housing and Urban Development, Mr. Charles Hinga. Distinguished participants, ladies and gentlemen, all protocols observed, good morning. Welcome to the second annual Kenya Affordable Housing Conference. A warm welcome to those who are joining us virtually from all across the world. I would like to thank at the outset our co-host, the National Treasury, represented here by the PS, and the World Bank, for working with us to host this very important conference. I'm also extremely grateful to my colleagues, my team at the KMRC, for the organization leadership of this event. The theme of this year's conference, and this you recall we had the first one last year, of unleashing affordable housing potential to drive economic growth, was deliberately crafted. We have every intention to discuss and demonstrate the importance of affordable housing in our country's economy. And so, this conversation is not a good to have. It's a must have. And why do I say that? Well, we have every intention to support our communities to live in dignity, right? But more fundamentally, we strive for results that put people's access to decent and affordable housing at the center. But the question remains, how do we do that? All of us in this room are doing something about housing, and literally everyone is a stakeholder in housing. But none of us can achieve this alone. In fact, not even government. So collaboration and partnership are the way to go. That's why this conference is a must-have. We need to build synergies both on the demand and supply side and genuinely work to support delivery of decent and affordable housing to our communities. Before I continue further, let me just share some numbers, hoping that this will set the context for the discussions we are having in the next two and a half days. According to the Kenya National Bureau of Statistics 2021 report, 18.3 million Kenyans are in wage employment. Out of this, about 3% earn Kenya shillings and 100,000 and above. 68% earn between 50,000 and 100,000 every month. And about 29% earn between 50,000 and between 30 and 50,000 Kenya shillings monthly. Now, what does this tell us? It means most Kenyans cannot spend more than 30,000 shillings monthly towards owning a home, either through rent to own or a mortgage. And that explains the informality of our neighborhoods. Houses are being built, yes, for purposes of accommodating people, but potentially not decent housing. We are told about 50,000 units are delivered in our market every year. But when you look around Nairobi and Nairobi metropolitan areas, Kiambu, Machakos, and Kajiado, what do you see? You see a lot of houses coming up all the time. So the question is, what's the nature of those houses? And how are they funded? Should we consider doing some kind of market survey or research to determine the actual position of housing in our market potentially before the next conference? But we also told 98% of those units are for high income. Remember the 3% that we mentioned earlier? and only 2% is available for moderate to low income earners, the 97%. So how affordable is affordable housing? In KMRC, we provide home loans of up to 8 million with a monthly income threshold of about 150,000 shillings. And that is purposely done for purposes of pushing financing down market. We extend concessional long-term finance of 20 or 20 years or so at fixed rates, which is very new to our market. For the first time in our country, we are talking about single-digit rates on home loans. And we have achieved that already with the primary lenders or participating institutions that are working with us. Since December 2020, when we started lending, we have disbursed Kenya shillings 7 billion of home loans, refinancing about 2,475 homes on an average mortgage size of 2.3 million shillings. We issued a corporate bond earlier this year, which was highly oversubscribed, and this demonstrates the confidence local investors, particularly pension funds, have on KMRC, notwithstanding its short history. We are blending these resources with our concessional funds to reduce the weighted average cost of funds before we disburse the funds to the primary lenders who passes the benefits to wananchi. This, in our view, enhances affordability of end-user finance. But we have other questions. How about the cost of units? We are told land constitutes 30 to 40% of the construction costs. And of course, you know there are other input costs. So if you buy a house of Kenya shillings 1.5 million, but it costs you 30 to 40,000 shillings monthly to commute to work, will that be considered affordable? As you can see, affordability is relative. It narrows down to a particular borrower or particular customer. It depends on what unit and what size. And so we will be hearing a lot about this from participants in this room, and we also have the pleasure of hearing a keynote speech by the CS Lands, Public Works and Housing, who will enlighten us about land reforms and what his ministry is doing to support affordable housing. We'll also have the privilege of getting remarks from the PS National Treasury, as well as my friend the PS for Housing. We appreciate our key stakeholders who are showcasing their respective affordable housing solutions in the exhibitions at the courtyard. I urge all of us to visit the booths, interact with the exhibitors, and learn more about what they are doing to advance affordable housing. I'm excited about the discussions that we're about to have. In fact, it sounds like it's going to be very stimulating. We have a great responsibility, and we have a wonderful opportunity. Thank you. So it's my privilege and honor to invite the PS for Housing to make his remarks.
Thank you, Joe. The Cabinet Secretary, Ministry of Lands, Public Works, Housing and Urban Development, Honorable Zachary Njero, my PS friend from the National Treasury, MD, Kenya Mortgage Refinance Company, stakeholders in affordable housing program here present and those joining us online. Ladies and gentlemen, good morning. I'm so delighted to see so many familiar faces and people whom I can call friends along this journey. And the CS and I, we have a very daunting task. In the last government, we were to deliver 500,000 homes in 5 years. Now the task is even higher. And I think I can see friends who are ready to help us to undertake that responsibility. The government of Kenya has an ambition to provide affordable housing to Kenyans who work the hardest, but live in some of the most deplorable and toughest conditions imaginable. As a government, we have a desire to deliver the constitutional mandate for decent and adequate housing in line with the National Development Blueprint Vision 2030 and the broader housing policy and legacy framework. The policy ambitions of the government currently are to focus on the following major areas. One, increasing affordable housing supply to scale through targeted delivery of 250 units annually. Expanding, that is two, expanding the blueprint of the program nationwide to ensure that each county participates in provision of affordable housing. Three, increasing access to affordable housing finance for homeowners through provision of tenant purchase scheme, otherwise known as rent to own, and mortgages. The government hopes to move the number of mortgages. I was speaking to Joe, and he tells me this number doesn't look like there is a scientific way of establishing it. It keeps on oscillating. So, but for now, for purposes of this conference, let's say it's 30,000 to 1 million. Integration of micro, that is number 4, integration of micro, small, and medium-sized enterprises, otherwise known as Juakali sector, and affirmative action groups in the housing supply chain, thereby contributing to the economic recovery that we so much desire. The provision of housing is a complex venture that requires a highly coordinated delivery mechanism that works to continuously resolve systemic issues that limit the access to affordable homes and affordable finance. Government wants to structure its intervention to resolve these systemic challenges in home ownership and in rental by facilitating the private sector to engage in affordable housing development at scale. Very important that we do it at scale. Provision of housing at scale requires a focus on master planning so that human settlements are developed in areas that connect economic centers of activities as well as the transport corridors. I think that is what Joe was saying, that it doesn't matter that we can bring down the cost of a unit, but then the cost of transport becomes prohibitive. Our developments will be mixed income and mixed use. Very important that they become mixed income so that we can create cross-subsidization in these models. Our development framework embraces principles of universal design so that we are also able to take care of our other citizens that are able-bodied differently. And we also have a commitment to develop climate smart and future-proofed developments with a focus on IFC EDGE certification in terms of our building, as well as integration of smart technologies. So ladies and gentlemen, affordable housing is not synonymous to poor quality or cheaply done houses. We want to make sure that they are delivered in a climate smart environment. Cumulatively, our intentions have an overarching aim of catalyzing development by 1, providing land for projects in areas suitable for human settlement, developments at no cost to the end buyer. 2, investing and providing bulk infrastructure to those sites. In other words, we want, as a government, we are making a commitment to service those parcels of land, because if we leave it to the private sector to service, it increases the cost because there is an actual cost of the infrastructure, plus you're going to layer a markup on it, thereby making it unaffordable. We are also availing tax incentives that facilitate reduction in construction of homes and crowd in participation of private sectors, developers for these lower income segment. 4,
facilitating efficient structuring and transactions by fast-tracking approval processes for developments. CS, there is a study that was done in 2017, released in 2018 by the World Bank, titled Unaffordable and Unavailable. And it actually costed the cost of unnecessary processes adds to another 15% to the cost of the development. Those are all areas we can improve because they are within our control. Unlocking finance. On unlocking finance, we are focused on accessing pooled resources that can provide cheap and stable financing. Most recently, we started work with pension funds to structure a suitable vehicle to provide investments for investment-grade housing products. We are very clear, and we have had very many engagement with the pension funds, and they have made it very clear that they are ready to invest in housing. They have actually set for themselves a target of 500 billion shillings a year, and moving that by end of by year 5 to 1 trillion of monies that they're going to mobilize and make available for housing. The only condition is that these must be investment grade. And I can see a lot of professionals here, I can see a lot of financial institutions, fund managers. We need to make sure that we structure these deals in a way that makes them investment grade. In addition, the operationalization of the National Housing Development Fund to go beyond voluntary contribution is another focus of our financing strategies. Through the National Housing Development Fund, we can provide a mechanism to pool our resources and underpin the financing of housing projects on a large scale. The motivation for this focus on large pooled resources is the fact that we need to move beyond sanctioning projects in piecemeal so that we can benefit our economies, we can benefit from economies of scale that reduce the cost of inputs and ultimately the cost of homes. Pooling our financial resources in the fund will allow us to offer offtake guarantees to investors who otherwise have no appetite to provide housing to medium and lower income segments. And by the way, they are the majority. Through the same pooling, we will offer affordable financing to medium and low income earners who are not able to access low interest rate mortgages. In terms of job creation and economic recovery, embarking on this housing agenda will stimulate the economic recovery at a local level. In a project where we build 20,000 homes, for instance, you will need about 100,000 doors at a current estimated value of 1.5 billion shillings. These doors must be made and produced here locally by our informal sectors and other SMEs. And we can offer them a direct income generating opportunity without middlemen and brokers. If you can imagine that each door has on average 4 hinges, this represents another direct economic enterprise and industry for our cottage market. We as a ministry have ring-fenced 69 items. So in other words, we have deconstructed the house into components. And each one of those components represents an industry. Let me tell you, you don't need a PhD in economics to understand that the way to build an economy is to create a consumptive demand. And once you create a consumptive demand and you are able to do it at scale, we can be able to produce so that we can sort out the youth unemployment in this country. 69 items that we have identified, we have standardized them. So we have a standardized manual, which we are calling the Jua Kali Sector Manual, so that we stop building designer houses. We know what happens to requires what we